Welcome to the Real Estate Power Play Podcast, your launch pad for skyrocketing success in real estate investing. I'm your host, Gabe Rodarte, alongside Mark Monroe. We're ready to bring you transformative stories, groundbreaking strategies, and the insider secrets of real estate giants. Get ready to accelerate your investment journey and become a true power player in the world of real estate. Hey guys, welcome to the Real Estate Power Play Podcast. My name's Gabe Rodarte. I am your host today, and I have my good buddy Maher. He's going to help us and help you figure out how to go from a residential real estate and share his story to get to commercial, how he's going about doing it, how he started off, which is mainly in commercial, and just kind of go over his journey to see how we can help you grow your business and grow your commercial environment. So let's jump into it, Maher. What is the word, my friend?
Hey, Gabe. How's it going? I'm Maher Vartanian. I'm from the Philly area. Just a quick 30 seconds on me. I started off in finance, high finance. First job out of college was at Goldman Sachs in investment banking and wealth management. And very quickly, you get it. You're in these like 80-hour work weeks for someone else, grinding away for very little reward, right? You don't even see the fruits of your labor most of the time. So I was out in the Bay Area, San Francisco, ended up moving back to the Philly area, just start figure it out again, right? I worked my entire career at that point to get there. Did it for about a year and a half, realized I didn't love it, came back, and I accidentally fell into the commercial real estate space. It was a LinkedIn quick apply. It said,
Wow.
it said Marcus Millichap investment sales, and I said, all right, I guess we'll sell equities. Walked into the door, and they said, no, these aren't stocks; these are buildings. And I'm like, all right, little younger Maher in early 20s, kind of arrogant. Worked at Goldman, thought I knew everything. I'm like, oh yeah, my dad owns a couple units. I know things about buildings. And when I was to my credit, when I was at Goldman, I did a lot of analysis on their private equity side as well. And for them, that considers real estate investments for the high net worth individuals we had. So I kind of understood it. And then once I started kind of digging into it more, I'm like, wow, there's a lot more to be had here.
Yeah.
There's inefficiencies in the market, right? And if you come from an investment background, you understand that the best returns are when there's inefficiencies in the market. And real estate's probably the most inefficient industry. And that's why it gives us so much pain and trouble sometimes. But that's why it's also, we're still doing it because the rewards are unmatched most of the time. And it took some time, but I started net lease sales and pivoted to multifamily and industrial before COVID hit. And then during COVID, those first 3-4 years of COVID, my partner and I, we created a team of, we were a top team in the Mid-Atlantic region, 17 offices, over 250 agents. We were doing over 100 transactions a year at the commercial level.
Wow.
Just grinding away. And learned a lot, every problem.
Was that your team or the whole group, the whole office?
No, that was my team. Craig, wow. My partner Craig and I, we had at one point we had 4 full staff members and 15 junior agents under us.
Wow.
Yeah.
That's a good grind.
It's great. When I left Marcus, I was 28, right? So this was all my early 20s, mid 20s. And you learn a lot, right? Marcus teaches you the fundamentals of commercial real estate. They don't teach you how to start and run a business, right? We're 1099s. You have to figure it out. You look for mentorship, you look for help. You try to make it a real business because we understand this, right? Like there's ebbs and flows to this industry. And right. when it flows, it flows well. And when it ebbs, it takes you back. You have to take a step back and tweak things.
Right.
And once you can get this functioning like a real business, that's when you can start enjoying it. That's when you can count on it, and you can start making investments and life decisions like your W-2 peers, right?
Yeah.
So
Yeah, that's true. It's not as ebby in
yeah.
your words. Okay, so now, so you do that. Okay, you have this team, and then you pivot, right? You do another trend. Like this is what happens, and this is what I love having this conversation with people of like, I mean, I'm 44, and I can't tell you how many times I pivoted. We had a big team meeting last night with our executive team, and we're talking about what are we pivoting now to, and what are we doing, and who are we moving around the chess pieces. Um, so that happens. You have this big team. Then what?
Then you kind of start seeing the writing on the wall. Market's shifting, rates are rising a bit. The newer guys are, it's everything's getting a little harder. New agents, understandably, they don't, when you first start, when I started at Marcus in 2018, it's like you don't make money for the first 12 to 15 months, right?
Yeah.
Um, and when these new guys were coming in, they were making money their first quarter, some of them, right? Because everyone was making money. You know, it's like that old adage from the Rockefellers. You know, when the shoe shine boy starts giving you stock tips, it's time to sell. Um,
Yeah.
and when because we were in a bubble, right? And I told the guys, I said, listen, like this is going to start getting rocky. Rates are rising. We need to pivot. We need to kind of come down, like focus on fundamentals. And we started shifting slowly. We ended up moving our team from Marcus to a more boutique shop, more aligned with our values and how we wanted to grow as individuals. We reduced overhead. We reduced our size. You know, we wanted to because during this time, every year, a couple times a year, we're my partner and I were picking up commercial assets, right? On market deals, things that in
Wow.
our backyard that we that we wanted to start building equity in, great deals. Um, and it's and we that's something we wanted to focus a little bit more on during when I was at Marcus. I joined Commercial Academy where I never met you, and I started because one of my clients that's also in Commercial Academy introduced me to the group, and I from that kind of opened up my eyes as well, like saying, hey, like this business ebbs and flows in a much different way,
Right.
a little less risk adverse in some ways, if you can call it that, but a little bit more income I can count on. I'm entering a phase where I wanted to start a family, and brokerage is great in great times and pretty lame in bad times. So it's like how I don't want to be. I grew up in a family where I kind of call them recession resilient, and I kind of wanted to kind of have that. I wanted to raise my family in that same sphere, if you have. So we pivoted, got a little smaller, more nimble, and it's easier to pivot in that sense. Started growing the portfolio a bit more aggressive, and we've been there 2 years now. We've almost doubled the size of our personal portfolio, but we're still servicing our clients, and like we're being more choosy. We're picking and choosing what we want to work on. We don't have to work on everything anymore. We've done over $1 billion in transactions on the brokerage level. Our best guys know and trust us. They love to watch us grow. They don't have that scarcity mentality. Early in my
Yeah.
career, my first deal was a 5 unit. I had people not want to work with me because they thought I was competition. You know,
Yeah.
uh,
Yeah.
it doesn't make sense, right? The
Yeah.
biggest guys in the industry don't think like that.
Yeah.
They want to see they actually appreciate the fact that now we speak the same language when we're talking about
Yeah.
renovations or act buying, or what I need the time for, what for due diligence, or the technicalities. The devil's in the details, and now I understand those details much better because I am
Yeah.
on the principal side.
That is good. Yeah, I think one of the things you're mentioning that I don't hear often, but I do hear like in my world. So most people know that we run a commercial group, and just the different stuff we do for the brokerage side is one arm of what we do. We do, I came from residential all the way up the chain to what I'm doing now, and then acquisition for commercial assets. Um, I don't hear many realtors or brokers really get um, get information on like how to pivot and like acquiring properties and stuff that
Yeah.
you're saying. I know we're joking around about it, off camera of like, hey, these other assets and stuff help to create a buffer, right?
Mhm.
Of not just time, but I mean, there's something to be said about having a multifamily unit that's cash flowing for you. And you have, I mean, even if it's small stuff, even if it's an 8 unit or a 12 or a 20, and they're not really even a triplex, and you're just going, man, I know that there's an extra $2,000-3,000 coming in right there. There's an
Yep.
extra thing. There's something to be said about that. It's especially in industrial space where you're just going, it's kind of just like mailbox money at some point because all the hard work's done up front. Um, there is something to be said of that. I just don't hear that. And I want to commend you on that because I think that you have, and I look to you also, and our team does, of going, hey, how does that work? And like, how are you encouraging other people that are brokers, agents, brokers, other newbie investors, regular investors that have been around going, hey, look, this is what happens. Right. So it's not, we'll go into more of the assets and what we're doing and what you're doing and acquisition and stuff like that. But I think that's a key thing that you figured out. I know you came from finance and stuff, but you've always been a great joy of listening to, hey, look, this is some of the stuff I've pivoted. All right. What is something off the top of your head right now that, and I'm going to kind of throw a monkey wrench in the conversation of like, what is something that was like a, oh crap, did you ever have an, oh crap, we need to pivot now moment of going, hey, we need to start changing things up. I see something coming. Let's do it now.
Yeah. Yeah. No, yeah. It was as soon as rates ticked up a bit and the shock we saw from the market was like when rates went up the first 25, 50 basis points, the market reacted way too much to it. Like
Yeah.
you heard pencils down, like you heard pencils down for across the country. We've
Wow.
transacted in 38 different states. It doesn't matter
Wow.
what kind of deal, asset class, deal size we were working on. And I'm like, whoa, let's if 25 basis points is what's killing deals, is what's making these guys, these funds stop, these all this new money that hit the street over the last few years, if that's what's making us stop, like I mean, where else do you think rates are going to go? I mean, they went from 3.5 to 4%, right? Like it's historically still the lowest on record. I
Yeah.
mean, where we are today is 2016 to 2018, right? Like I started my career in this kind of environment.
Yeah. Yeah.
So I told the guys, I'm like, listen, like this is, we need to start, we need to, I told Craig, I said, we need to focus on our deal. If we make half of what we made last year, what's that going to look like?
Yeah.
And just to kind of pivot from the on the ownership side a little bit, because these two things go in parallel. The first asset we bought, Craig and I both bought $25,000 to the table, $50,000. That was our budget for our marketer's salary for that year. But that property was going to cash flow $25,000 a year. The first few properties we bought, we never saw cash flows from those deals. They were
Yeah.
going directly to pay for staff. We were investing in our staff
Yeah.
in a way, right? Because I told them, and he Craig, to his credit, trusts me with this on the investment side wholeheartedly. And I told him, listen, like we need to figure out, like if we can maintain our staff even in rough times and bad times, we're still going to be we're still going to come ahead of the pack, because we're not going to skip a beat. We're still going to be, we're not going to, I don't want to have to go back to doing marketing or underwriting or any of that stuff. If we're 24/7 on the phones, focused on clients, we're always going to be able to make money, right?
Yeah.
And we'll take care of ourselves. The assets will take care of the staff, and we don't even have to lay anyone off. What we ended up doing was we ended up shifting some of our staff from onshore to offshore. Marketing assistants, things like that, operations. To the Philippines. We did that transition while rates started to tick up a little bit. So that was my oh crap moment. So I was able. It didn't happen overnight. It happened over maybe 6 months, and we were able to see it quickly enough to make that pivot slowly, because training and everything, and we didn't notice much downtime, which was great. And then when we hit maybe the last year, 2024 was probably the toughest year, lowest transaction volume of my career.
Wow.
And we didn't have to let anyone go. Again, because the assets we were building at prior to that, over the 4 years prior to that, maintained our overhead. We didn't skip a beat. We were still doing BOVs and everything we were doing, and we were just working towards closings. If however many we had, so it's like the two businesses started feeding each other. But
Wow.
then, but then you get to a point where, hey, like, let me double down on this acquisitions portion of my business. So because I was able to take the brunt today, but it's just it's my wife and I, and Craig is growing his family too. So we were able to do that today. But how about the next cycle, right?
Right.
If I can double, triple my portfolio from now until then, I'm not going to notice any difference. And if I diversify my portfolio enough, I can be recession resilient again. Because in my eyes, we're in a silent recession right now.
Right. Dude, that's so good. I don't know many people, again, that look at it that way. Typically, what I see, and you probably see this too, is that people are looking at assets going, hey, I'm going to freaking get rich. I'm going to do, I'm going to go and grab a bunch of assets. I want to cash flow these babies. I want to do the, like everything that you typically hear and all this stuff. We all know the market's changed. Insurance has changed. Taxes have changed. The properties have are the same, but I was like, as far as the market and the need for certain type of asset classes, those have pivoted also, just like they will in another 5 years and another five. Like that's just how things go. This is real estate. But you've looked at it from a place of strategy where you have offense and defense.
Mm-hmm.
And I admire that. I don't think that most people see it as that. I think people see it as maybe like a nest egg type thought process or more of a offensive point of view because it takes so much energy to be offensive, right?
Mm-hmm.
You're taking a lot of energy to be offensive. What is something that you would say that you have learned throughout this process of doing this on looking at it from an offensive point of view and a defensive point of view? Because it kind of seems like you look at things from that type of finance.
Yeah.
What is something that you have been seeing or that you do yourself that's a little different than like some of the clients that you're talking to and stuff, and you're like trying to help them understand, hey, this is both like offense and defense. This is long term and short term, fast money and slow money.
Mm-hmm. Well, and you have to look at it in those two tranches, right? But then on top of that, the layer that really, where I saw my epiphany this year, and you and I were talking about it. It was really in time management.
Yeah.
Right. Like we can look at the numbers all day, right? The numbers tell a beautiful story, but it doesn't matter what those numbers mean if you don't have the time to actually facilitate, right?
Yeah.
We're athletes. We get paid for performance.
Yeah.
Scratch that. Athletes get paid for sitting on the bench sometimes too, right? We don't. We have to be in the game. And if we're not in the game, we don't get paid. So it's like what I like. It hit me. I guess 6 months. No, April. It really hit me in April. We had a lot on our plate. Every Friday, Monday and Friday at 8:30, I get on a team call with my guys, and we go through our meeting notes, our to-do list, basically. Keep everyone accountable, have everyone tell their piece, what their plans and goals are for the week, but every deal, right? At any given time, we're working on between personal acquisitions and listings, about 20 deals, right?
Right.
High volume. I'm always about high volume, right? And out of those 20 deals, we have to prioritize those.
Yeah.
Highest probability of closing. It's probability brokerage is the name of the game. Is this a project or a paycheck? You have to be honest with yourself. Not every deal is a paycheck. We know that. Some things are overpriced. Some things aren't going to get financing. Some things are funky. Some things have too many caveats. So prioritizing the paychecks over the projects, and being basically having the confidence to remove yourself from the projects. It's okay to give listings back if they're not going to be fees, right? Like what do we get for having a deal on the third parties, the MLS, or having our sign on the ground if people are just going to associate us with a deal that didn't trade? That's worse. For me, that's worse. I don't want that. I transact. So prioritizing those. And on top of that, Are these fees worth our time? Is a $50,000 gross fee worth my time in where I am today? 3 years ago, I would probably say no. Why am I going to say yes today? It's not worth my time. Either if it's a client that I have a relationship with or it's a high probability closing, what I'll do, I'll give it to one of my junior agents. The guys I trust, the guys that uh, I know are going to put more thought and care into it. I don't need to get every cent, right? Pigs get fat, hogs go to slaughter. I can get fat, I'm cool with it. I don't need everything. Let everyone else eat, because that's why they're with me. That's why my guys run with me through the ebbs and flows. So, I'm looking at I look on my to-do list, every deal I have, it's like 123 Main Street dash what is the fee. 123 Broad Street dash the fee. So when I'm looking at this sheet every single day, 10 times a day, I'm like, all right, what's next on the list? What do I need to prioritize now? This, and this. It just is what it is. Hey, these guys, these three leasing deals. Hey, let me get one of my juniors on them. He's gonna put the time on it. I'm gonna still transact. I'm gonna get paid less, but who cares? Because we're still getting deals done. And because deals lead to more deals. As long as I can tell people I did 10 deals, I'm gonna get 10 more deals.
Yeah.
It's like rabbits reproducing. I believe in it. So if you come in with that abundance mentality to this business becomes a lot easier to manage. And if you spread the love, this business becomes a lot easier to manage.
Yeah.
So that's the time management portion of it was the thing that really, it took out the noise.
Yeah.
On paper, you can build this business all day. It's easy. But the time management was key to this, especially this year.
Yeah, that's awesome. And I think that most people everyone that I know in this business, in the real estate business, is probably saying, and this is the reason why we talk about having more clarity, and clarity is power, and being clarity in what your focus is, not only for your day, your month, your year, but in the moment of what you're doing. One of the things that we've been doing as far as a team goes, and I know this sounds really odd, but we joke around, and I'll say something like, for you, I'd say, hey, look, by the way, my hair comes first. Right. And they'll go, yeah, man, thanks a lot. I just got freaking stuck in the weeds. A client happened here, or this deal I'm working on, it might be falling apart. It's going to be this awesome cash flowing machine. And now you're in the weeds. You're trying to do everything to make this thing going up. And you almost need your buddy to just like grab your hair, get it out of the freaking weeds and go, look around. Like, you just spent all day working on this thing.
For
nothing's
what?
happening. Nothing's like, you're just in it. And it's a little bit of stress, a little bit of worry. You're talking to your, the counterpart. You're talking to maybe a broker. Maybe you're trying to find a lender, or maybe you're in the weeds of this stuff, and you have to tell yourself, look, I got to put myself first also.
Mm-hmm.
I can take these other phone calls. I could do these other things. But if I'm not in my game, nobody wins.
Yeah.
Right. And that's the part with time management of going, you know what? And we joke around in our team, but it's really true. And it's not even selfish. It's actually the most beneficial thing you can do, because that's the point of a team. A team isn't where you have 30 people doing the exact same thing, right? That's a sales office.
Yeah.
Right? A team is when you have Maher and I, and we're working in a whole nother state, right? And I'm like, hey, let's divide and conquer. Right.
Mm-hmm.
What do you want to work on? What do I want to work on? Two different skill sets. You do that. I do this. That's a team. Right. And so that's something that has been one of the biggest ahas of being involved with commercial real estate, is noticing how much easier it is when the team is doing teamwork. What is something that you can say you've highlighted on in that vein of saying, hey, in commercial real estate, you've transacted with high net worth individuals to big corporations, big groups. What is something that you've noticed whenever someone has like a really functioning high level team?
They're not greedy. Like, that's the thing. It's not like it's like the land, like the guy with 4 buildings that he owns on his own, and that's like everything matters. He's at the buildings every day, replacing a pipe, or fixing the mailbox, or painting the shingle, whatever. It's like because it's a scarcity mentality. I like, and they talk about it. Every dime matters. But the bigger guys, it's like, hey, like, they would give up. They'll share in the equity splits or spread or a little bit like they spread it. They spread their risk, which makes more sense on an investment standpoint. But in doing that, keep in mind you're expanding your team, right? If you and I own an asset together, we're aligned to see that succeed. And it's like, hey, like Gabe, I need an insurance guy. Insurance is going up. Who do you have? Now you're giving me someone else out of your
Yeah.
Rolodex. I'm gonna use. Hey, Tyler. I have these 3 other buildings. Can you help me out with those too? Or
Yeah.
vice versa, right? Like now we're spreading resources. We're sharing resources. And we're sharing risk. We're sharing resources. We're sharing profit. And now you and I have the capacity and capability of doing more deals. Which,
Yeah.
because in this game, keep in mind too, everyone talks about their home runs, right? Home runs, everyone, it's the highlight reel, right?
Yeah.
Every day, it's the home runs. The
Yeah.
singles are what get you into the game. They're
Yeah.
what keep you in the game.
Keep you in the game. Yeah.
Mhm. And how long can you stay in the game? The longer you're in the game, the more you're going to be able to perform. The more opportunities you're going to have for those home runs. So I'd rather have 5 singles and then because if you're always going to look for that home run, you're going to be looking for a long time. Analyst paralysis is a real thing.
Yeah.
It's like, but how about that? We just we dip our toes here, we dip our toes there, and then that's very important. Like right now, as we're having this conversation, there's 3 deals we're acquiring next month. I'm seeing my extended team sending emails back and forth. My inbox is flooded with emails right now, operating agreements, term sheets, insurance quotes, and
Yeah.
but I don't own 100% of that asset. It's like it's like hiring an assistant. You're buying your time.
Yeah.
You're paying for other things. You need your sanity. Like you need that.
Yeah, I think that's one of the things. I have a friend of mine. We do some of development stuff together, and he's across the world right now. And we were talking yesterday. Like he just left Dubai. He's in India right now, and we were just kind of talking about one of the developments. He goes, "Man, if you can swing by and just do a spot check on the guys," and I'm like, "Yeah." Because we're at a place where it needs to get to the next level, right? So I'm like,
Yeah.
yeah, I'll go by there. And I'm like, man, I'm glad I did. There's some stuff even the inspector didn't even see. So
Mm-hmm.
yeah, cool. This is part of my job. It's part of my role. And I actually love that stuff. I really love going through those type of sites. So I'm
Good
like,
to hear,
sure.
bro.
So I'm going, I mean, we're in real estate for a reason, right? We
Yeah.
have to love the asset. So and everyone's listening probably like, this is cool. So I go by, check a look at it, and we were talking about teamwork and stuff, and that's the key. I was like, have you been learning about teamwork differently since you're on the other side of the world? Like, this is a guy who's here, he's working 14-hour days, on the sites, doing like he's there with the guys. I'll probably even see him with something in his hand at some point, some tool or whatever. He has that mentality, but he's like, man, I'm learning so much. He's like, I can literally run everything just through my phone,
Mm-hmm.
and I'm like, yeah, you really can. It's
Yeah.
it's so crazy what we do right now. I think that the scarcity mentality is, and definitely from different people's background. Like for you, your finance, you have some analytical background, you have some background of like assessing, underwriting, looking at stuff. Whenever we get tired, whenever you get discouraged, whenever something happens as far as a deal, I think all of us go back to our original disposition of going, okay, well, let me just put my hands on it. Let me just do my own, let me do some underwrite. Let me just make sure, right? And use some of that old skill that you have because it feels warm and comfy and it feels good. And now you're in it. And this is what you're talking about, time management, of going, you know what? I can see myself going to some areas that I feel comfortable with, right? Same with me. Like I come from a construction background, and we used to have a ton of crews, kind of like what you had. And then like now we run the commercial brokerage stuff, and I'm like, you know what? I need to really just let some of this stuff go. It's not
Yeah.
going to help me long term. Yeah, can it be an extra 5K? Can it be an extra 10K? Can it be an extra whatever? Yeah, it could be. But at the same time, doing that and looking that time horizon, and you've helped me. You put me in check the other day, like this couple months ago, like, hey, that deal is really not worth your time. I'm like, man, that's totally true. Like I really do the math on it, and I'm like, I could be doing something else that's more efficient.
Mm-hmm.
What is something that you've seen where you're going? I've noticed, like, how do you prioritize the highest efficiencies? Because you're saying there's a ton of inefficiencies in real estate, because there
Yeah.
is. And that's just how it's going to be. We're dealing with people, we're dealing with their product, we're dealing with investment sales, we're dealing with businesses inside these products, from multifamily to whatever, people are living there in some of these things. Um, what is something that you're saying, like, hey, this is how I've learned how to be more efficient and get yourself out of the lower level stuff and go, I need to be doing ABC.
Yeah. Like I walked away from a deal last week that I was really hot on. Small multifamily deal, 3 units with 3 apartments, 37 self storage units. Little gem. I was picking up for like a 10 cap on in place income. But that 10 cap, it sounds good, right? At a high level, it sounds okay, but it was only after debt service and everything. It was only cash flow like $16,000 a year. So it's like, okay, that's not worth my time. So
Yeah.
it took me about 30 like 25 days through due diligence to realize it wasn't worth my time.
Wow.
And it's like I should have I
And
need
it's a
to
10 cap. So in the world of our world, you're going, holy cow, I'm buying it at a 10 cap, and I'm going to go be able to brag to my friends and my
Yep.
buddies. Freaking, I bought a 10 cap in this market. This is what's going on. Oh my gosh, what'd you find? And now you're going, wait a minute. This might have been one of the ones you've sent me that we've been talking about. But so now your mind's going, wait a minute. You did some numbers. Granted, you're pretty good with the numbers, more than most, I would say. So you go through the numbers, so we can learn from you, is what I'm saying. You go through these numbers, you're about 20. So even the Maher who knows finance doesn't do it on the back of a napkin, but you get into it after the napkin scratching
Yep.
it out. You get into it, you run some additional numbers, and you're going, wait a minute, right?
Yeah.
Was
Look,
that,
the additional numbers was me sitting on my deck at night thinking like, oh yeah, I can't wait to get that. I'm like 15,000. I want in my head, I'm like, what expense is that going to offset? What is that like? And I'm going through it. I'm like what, like health insurance and groceries for the year? Am I buying my groceries for the year? Like what am I thinking of here? And I'm like, this isn't meaningful. This isn't going to make a meaningful impact in my life. And it's like that was the light bulb moment. I'm like, I'm thinking too small. And it's like that's when I'm like, no, I'm thinking in the thousands. I gotta be thinking in the hundreds of thousands or the tens of thousands. Because I'm also working on other deals where I'm coming to the table with like $60,000, but my year one NOI is gonna be like $40,000, right? So it's like, why am I like? But this was turnkey, very low management. But it's like that's not what I buy. Like I'm not a dentist, like to come in and buy something turnkey. Um, I ended up flipping the contract to one of my best friends because I still genuinely like the deal. For me, it wasn't going to be life changing. For me, it was going to be a project. I just saw myself in 48 months or 18 months or whatever it may be, having to stop what I'm doing, maybe working on a $12 million deal at that time, to go run to my asset that I picked up for 650 and
right?
like change a lock or do something or some sort of management. And I'm like that the day that happens, because that day is going to happen, we all know it. I'm gonna kind of start regretting it and start hating this little bite-sized deal. And then I'm gonna have tie up my equity in this. Let me just look for something that's more worth my time. Let me hand this off to one of my best buddies, get his feet wet. He said it. He's like, Maher approved the deal. It's a Maher deal. He's like, I can go in eyes shut and pick this up. I'll be fine. I'm like, all right, man, whatever. I'm
Great.
walking him through due diligence. He's learning a lot. But
That's
so it's just that being honest with yourself. Again, but 2 years ago, I wouldn't have thought like that. As I'm growing into this abundance mentality, because I was even telling my wife, I'm like, dude, we'll find 10 of these. There's a million of these out there. I just have to find more. I said,
yeah,
what's that? Just looking for
yeah,
more. That's what the hunt is the fun part.
yeah. That's true. That's true. Um, This is really key. I think that look, even from the residential world, people who look at that and those type of assets to the commercial world, I think many people, I remember a guy, he used to have like 20 something, just single family. And, he'd be spending his Sundays, just making sure they're all done and everything like that. And time creeps up on all of us. I mean, it's just what it is.
Mhm.
I think that one of the quotes that our mentor, Scott shares is basically, hey, look, the days seem longer than the years, but when you look back, the years fly by.
Yeah.
So the idea is like, hey, look, the days feel freaking long, guys. I mean, this is work. You're in the moment, you're messing with your own head knowledge and your head game, and you're dealing with a lot of people, and you want to keep you on track for the mission. This is why, having clarity is so key, because the day can fly by. Your week can fly by. Then you
Yeah.
end up in a year from now and you're going, man, I just acquired some stuff that I probably shouldn't have acquired. Now, granted, if you're just moving into this, and I'll give you guys, like, for those who are maybe wanting to do more and learn the commercial asset space, um, you got to
Partner
acquire
with someone.
something. You got to start somewhere. Like
I
that,
would partner with
like
someone.
Maher's talking about this as someone who's been doing this stuff and how he's pivoting, because that's what I'm asking him. But for you, you might be in a place of going, man, this is my first purchase. This is my first multifamily mobile home park, RV park. Then go do it. My first park wasn't a swing out of the park at all. The best part about it for me was I had very low capital into it, and I was able to cash out, right? And I
Mhm.
was able to learn basically how to pivot money around. I learned how to do notes and put everything on a note. I learned how to sell notes. I learned how to, I mean, that got me into so many other cool spaces that I'm like, oh, I know how to do that now.
Yeah.
And I know how to do that now, to where when I see something, I'm going, oh, we could just create that. Like I know how to do it. I'm not, so you got to start somewhere. And I think that's one of the things. Analysis process is a key thing for those who wanting to start. And then you get into a place of what my hair is talking about, where you're going, what's the biggest bang for the buck? What's
Mhm.
my return? What's my ROI? What is my time going to be on this? And that's one of the things that we have been challenging each other over in the last year, of going, okay, is that the best use of your time? Right. And so what I find, though, my hair, and I think you find this probably more than me, for your clients, for other people, for other investors, for maybe your team, is that maybe people don't know how to identify their strengths as much, and going, you know what, like, they don't know the gold that they have, of going, hey, I think predominantly that's what happens. I think you're a rare jewel. You're one out of 100, and everyone else is the 99, going, hey, I'm just trying to figure out what is my sweet spot, right?
Yeah.
And I think they need people like you to help them identify, like, dude, you're really good at these things. Why are you doing this other stuff? Like, I can just tell from over here, you're great at this. Why are you doing that? You've
Yeah.
done that to me. Like, Gabe, you're really good at these other things. Figure out how to offload the other stuff. Do more of the stuff you're great at. What have you seen that as you grow through this, and have you seen the whole part of where it's kind of like you're kind of polishing off, like getting rid of all the dust off of someone else's gem, their gold, and going, look, man, this isn't, you're better at these other things. Let's go do that.
Yeah. Yeah, I do it with my team. I'm constantly like looking for where they excel, because sometimes you don't realize it. And I had this conversation with my partner, right? Like, my partner is great on the brokerage side, especially like in the middle of the transaction. Like, once due diligence starts, I'll throw Craig in there. He'll take it to close. Like, I can trust him on that. Every hurdle that comes up, him and I will game plan it, and I trust him to get it. I like getting the listings. I like finding the, like, I we complement each other, and that's great. And it's like realizing where we complement each other, and just being like, and kind of being honest with yourself of where you excel. Like, I've done hundreds of transactions in my life. I'm not saying I'm the best broker in the world. I wouldn't call myself a best broker. I don't even like calling myself a broker. Like,
Yeah.
I at this point, it's like I do it because I just know how to do it so well. But like, in the grand scheme of everything, it's like it's I'm okay at it. I'm pretty good. But like, I like operating more, right? I like being in the weeds of and making sure our assets are efficient, and running our business, and kind of deploying people, seeing where, but also explaining to people why that makes sense, kind of communicating that stuff. And I like
Yeah.
being on pitches, and understanding like clients' goals and wants, and what they need out of there, and kind of figuring out those puzzles. I like that advisory role more, than like that I guess that transaction role. So it's like, then you you have to be honest with yourself. You have to look back at the last, if you're a realtor, look back at the last 20 transactions you've completed. What did you love? What about of the transaction cycle? What did you hate? Double down on what you love, because then it's not working. Outsource the portions you hate. I hate doing the marketing. I hate putting the offering memorandums together. I can't stand it.
Yeah.
That was the first thing I offloaded. I'm not an artist. I'm not artistic.
Yeah.
Whatever looks good for me, everyone's like, "What is that? Like that looks like slop." It's not me. So pawn that off, hire that out, buy your time back, so you can double down on the thing you're good at. And in our industry, that thing you're good at is most likely going to be relationship building, networking, real networking, not like these just like mixers where everyone's just exchanging business cards. I mean, real conversations where you're coming, like people are really problem solving.
Man, that is so key. I think that I don't think we've ever had anyone on here really saying, "Hey, listen, you really need to identify who you are." Have you helped other clients, other investors, other people, help them identify? I mean, we can help them identify an asset, but while you're in the process of helping them identify an asset, or you're identifying yours, or you're talking to whoever, what is something you can give some advice to for someone who's like trying to go, okay, I'm trying to identify like what my strengths are. What do you tell your team? What do you tell yourself?
Generally, what your strengths are the things you enjoy. That's why they're your strength, because you're putting in reps without realizing. I like financial analysis, and I like underwriting. I like operating, and I also I like talking. Like I like communicating. I like talking about finances. I always have. When it was at Goldman Sachs and wealth management, or now, like, so I'm a good communicator. I'm good at communicating financials. Something most people, it's difficult to understand financials. Communicating financials is something I'm good at. So it's like showing that, illustrating that correctly, is like that. And so like, but I enjoy it. So I didn't realize I was good at it until people started like asking me to explain stuff to them over and over again. So and it's and that's gonna, again, having those honest conversations with your peers, your friends, the people that you work with are gonna be the most honest with you, right? And like in healthy relationships, healthy teams, like that's gonna be your barometer, right? Like my one of my junior agents, Nick, like, I know where he's a data guy. Like he knows the numbers off the top of his head, demos, lease comps, lease rates, lease expirations. I can bring him into a meeting and someone's asking detailed questions about a lease. I point to Nick. Like I don't need there's no egos here. It's like we're trying to get to the closing table, right?
Yeah.
Hey Nick, you take care of that. That's yours. Address it. Take care of that stuff. I'll step in when I need to. You'll step in when you need to. And so it's kind of like it takes time to jive. I guess a skill is to kind of identifying that in others. So because I feel like I can go into a meeting with anyone and kind of out their vibes, off their energy, kind of know what role I need to play. And sometimes you understand what role you need to play. And if they don't, your partner doesn't, but sometimes that's more important than them finding out what role they need to play.
Right.
If I need to be more passive, I'll be more passive. If I have to be kind of in it or dominant in the conversation, I'll take that role. I guess being kind of open to the situation is important as well, if that makes sense.
Yeah. Yeah, that does help out. And it does also help for many people. And again, we go back to this often on here. We haven't gone into this much detail on it, but really identifying what you're great at doing is probably key. And I think one of your biggest strengths, and I've said this multiple times, is identifying that. I don't even know if you see that in yourself of going, yeah, I know how to identify this in people that are across the board. You've said stuff to me. I've been in conversations with you, whether it's at a conference or wherever else where we're eating dinner, and you're able to highlight and pinpoint some of these things. That's actually a really good gift of not just naturally, but also something of experience going, I've seen this before. I've seen guys like you or ladies like you do good in these areas. Hey, have you thought about this other stuff? I think you'd be great at it. Put some thought into it. Right. And that's something that you're really good at, dude. What is just to kind of wrap up,
Yeah.
what would you say right now, just in the market conditions that we're in now and in life in the cycle 2025 mid-year, that you're doing that's super exciting that's just happening in your guys' space?
Uh, I think it's the people we're working with right now. It's, I mean, I'm having more fun this year than I probably have in the last 2, 3 years, because it's like the guys I'm transacting with today are guys that have been around for multiple cycles. The
Got
guys
it.
that started their careers in the 70s and 80s. And
Yeah.
it's like listening to these guys. Like I had lunch the other day with one of the number one developers in our region,
Wow.
and it's like he invited us out to lunch. My our analyst Max and myself, we came out to lunch with him, and it's just like hearing the parallels between the recessions of the 90s, 2000s, the teens, and now, the similarities and differences, how each one, like how they navigated every storm. And it's like the guys transacting today, like I said earlier, like when the rates started creeping up, everyone was pencils down. These guys are pencils
Yeah.
up right now, right?
Wow.
These are the guys. Like I one thing I say is, like, over the last 4 years, there's a lot of new money on the street, right? Young guys starting funds or syndications for the first time, getting their feet wet. Um, some of those guys bit off a lot more than they can chew. Some of them are really like weathering the storm. But then when you're with these guys that are just so confident about what they do, so defined and you see this, man.
Wow.
Everyone in their organization has a defined role and an objective. They have a defined investment criteria. They know what works, and they're still pivoting, man. These guys, they own 20,000 units. 20,000, right? Like I like drive. If you drive for 5 hours in a straight line, you won't see 20,000 units. Like they own
Wow.
20,000 units, and their head of asset management was telling us how he's like, yeah, we're actually changing up our portfolio a little bit. We're getting rid of the smaller units, anything sub 100 units, because they don't cash flow as well for us. And he's like, they were talking about the parallels between when they started in the like mid 80s, how
Wow.
when they first started, they were only buying 20 to 50 units because that was the middle market. The big guy, they weren't competing with the big guys. And like 40 years later, now they're selling off the small stuff and only focus on the big. I was just like, it's like you're seeing, and these guys are in their 80s, right? They're talking like their grandchildren are the third generation operators in their businesses,
Wow.
and they're talking about, and these guys are still in the game, and they're talking about how they're pivoting for the next for the upcoming cycle. And it's like
Wow.
I'm turning 31 in 2 weeks, and I'm looking at these guys like, whoa, like it doesn't
That's
stop.
crazy.
Like, yeah, man, it kind of gets you a little, like, pep in your step. Like I got to the car, and I sat in the car for 10 minutes. I'm thinking to myself, I'm like, what am I doing wrong? What am I doing right? Like,
Right.
am I pivoting enough? Am I focused on what I need to be focused on right now? And it's
Right.
like, and then the conversation, like, it's just, it's that perspective and kind of putting yourself in those rooms so you can hear that perspective. It's key. It's exciting. I don't know. It's part of the reason I love doing this.
Exciting, and that's the real networking. You think that people, I think what happens is people run into an issue where, and this is, I know we need to close this out. I need to honor your time too, but I think that people, because I used to run like a pretty decent sized networking group in
Yeah,
Houston, and we'll put 350 people in a room and could do all these things. But what you're talking about is so key because you're doing transactions. And I think that what people miss the mark of going, let me just go meet someone. And if you want to build out your database that way, it's a long process. I tried it, I did it. I'll tell you, I was not as sharp as my hair. I did not do financial background. I did not add my time up of going, where's the return? But I can look at it now and going, it helped me out today, but it's a longer term.
yeah,
What I think most people miss out in is that they can build a relationship like what you're doing, but you kind of have to be at the sites. You have to show up. I got an invite to yesterday for a big development, and the guy goes and he says, "Hey, listen, why don't you just come out to my development and I'll show you?" Because I called him about some of the other property we have, and I was like, "Hey, we have some land." He's like, we're trying to fill each other out, and I know him not well at all, but I know of him. And
Mhm.
Maher, he's like, "Gabe, listen, why don't you come out to our stuff? You see what we're doing, and either you can duplicate it yourself, again, giver mentality, or you can go and we can figure out a work together, and you can use my crews and my guys and my construction crews because it's all new build industrial,
Yeah.
and we can figure out how to JV together on some of the properties you have. Can you go find out if the seller wants to do A, B, C, and D?" And I'm like, "I'll do those. You'll do that." And this is like, I mean, this guy's putting together, maybe it's like 200,000 square feet of tilt wall.
Jeez.
So, and that's normal over here.
Yeah.
So, and then we have some other guys like that. So my point is, like, guys, if you do not take action and go on a Sunday afternoon and you're watching a game and then someone calls you and you go, "You know what? Let me return this call." And they're going, "Hey, by the way, do you have time either that afternoon, the next day, or whatever?" That's the world. That's what we're doing. But if you want to get out of the day to day, the mundane, the other stuff, you're going to have to be able to say, "Well, for me to get rid of the mundane, also I need to accept the adventure of it's a Saturday, it's a Sunday, it's late at night. Today I got a development freaking an hour and a half away. They're coming in from out of town. Their flights changed. It was supposed to be 4 o'clock. Now they're going, "Hey, let's do 6:30." And I'm like, dang, that messes up the rest of my timeline, and I
Yeah.
got to figure out how I want to do it. So now I'm like, I got to go back. But by doing those things, if someone's going to fly in from out of town to look at some assets, to do some other stuff, I might want to go meet them.
Yeah.
I mean, this might be something, you know what I mean? So I think that people miss those opportunities because they're not seeing it going, "Hey, these are the type of people that you want to connect with, build a relationship." And then you go, that's real relationship building. It takes it takes some intention. I wouldn't say real work because I say that a lot and I'm trying to backtrack that. uh, it takes really intention on what you're doing. And you've helped me out going, "Hey, what are you intentional about on your career, right? On your path." And then now I'm watching you kind of level up and I'm going, "Wow, that's really cool how you're asking yourself other questions." It's really impressive, dude. I mean, even the assets that you have going on now, and you're going, "You know what? I just don't know if this one's the one that I want to swing at anymore. It's not beneficial for me." Excuse me. Um, Dude, how do people get a hold of you? What side of the world are you on? And what do you like? How do people connect with you?
I'm on the East Coast. Call me. It's the best way to get a hold of me. Email me. I'm on Twitter. Put my contact information up on the screen as well if you can, please.
Yeah, I will.
Just reach out. I do these conversations. I have these conversations 15 times a day. I love it. Like this is how we all learn. I mean, this is if embrace the abundance mentality, and opportunities will just keep coming. I believe in it.
Dude, that's awesome. Guys, thank you so much for listening. If you like the show, if you like what we're doing, you want to get other people on here, you want us to interview other people, let me know. Share, like it, post it, and then contact us if you need anything. We're all over the South, Texas, all over basically all over the South now. And then yeah, let's keep going. Talk to you later, man.